The best investment in the world is investment in your mind. Hello, everyone. Welcome to this webinar brought to you by Bursa Malaysia and managed by LifeChamp. Today, our session's topic is titled Stop Picking with Technical Analysis. My name is Shen Chu. I'm the moderator for this session. So welcome to this session. Now, as you know, technical analysis is a study that is very important for us to identify, what are the psychology, the state of the psychology in the market, and where are the possible entry point and exit point that we can pinpoint from the chart patterns. Okay, today we're going to look into stop picking with technical analysis to take our technical analysis skill to a higher level. Of course, throughout the session, we also talk about how you can use equity trading simulator to gain, virtual trading experience so you can improve or even improvise your trading strategies. Disclaimer, whatever I'm sharing on this webinar is only for educational purpose. In no way that I give any recommendation for you to buy or sell any listed companies. Yeah. So if you decide to make any investment decisions, you're 100% responsible for all your investment risks. All right, so allow me to briefly introduce our speaker today. Johnny is an engineer come investor. He has more than 10 years of experience investing in the Malaysian market. His style is a combination of fundamental plus technical plus wind rider. Okay, what does wind rider mean? Okay, so we can ask him more about that. All right, he also hosted stock investing sharing session and investment courses in Johor, KL, and Sarawak. He is also a founder of a Facebook page and blog called Wind Rider Gain Investor. All right, so without further ado, let me hand over the session to you, Johnny. Hello, Johnny.
Yes, morning, Shane. Can you hear me?
Yes.
Yes, good morning, everyone. So I'm going to share my screen now. Okay, just give me some time. Yes. Can see my screen now?
Yes, can see.
Yep, so I'm audible, right? Can
yeah,
hear me?
Can hear you.
Yeah.
Can hear
Okay,
you.
nice. No, okay, right. Thank you, Shane. So first of all, thank you, Busa, and also LifeChamp for inviting me to come to be a speaker for this. So okay, just like Shane mentioned just now, our topic for today will be stop picking with technical analysis. Okay, so I'm going to go through what are we going to have in this session today. So the table of content. First, okay, let me have my pointer. So first, we're going to incorporate technical indicators in technical analysis. In the technical analysis world, there's a lot of technical indicators, but not all of them are useful for me in my case. So I only find certain technical indicators which are useful. And for me, as long as I can make profit with the technical indicators, those are the most important element. Okay, so second is learn to use the moving average in our trading strategy. So in the technical indicators, one of the strategy that I'm going to share is about about sharing using the moving average in our trading strategy. Okay, so next I'm going to have a step-by-step guide to perform a profitable trade. A profitable trade here means that sometimes we might lose money, sometimes we might win. So we just need to remember to be disciplined, because in technical analysis, the most important thing is we need to have our own discipline. So lastly is about to understand the functionality of the ETS. Okay, so I'm going to share in our platform, in the ETS platform, how I can customize the chart analysis in the ETS. Okay, so next, okay, this is my first slide of today, fundamental analysis versus technical analysis. So there had always been a debate on which method is the best. A lot of fundamentalists come and say that, oh, this method, their method, the balance sheet, all those financial reports are important. So for the technical analysis, they can come and say, hey, these technical indicators are important, which they think is the best. So for me, either it's a white cat or a black cat, as long as the cats catch the mouse, is the best. So we can have different sayings, different opinion, but don't care about all those things. Whatever method, whichever suits you best is the best. So for me personally, when how do I define that is a best strategy? So for me, if I have a strategy in which I do 10 trades, okay, so if the strategy gives me 70% of the profit, so I can consider that method suits me the best. Okay, all right. So next, so these are the popular charting software that we are available in the market now. We have Chart Nexus, whereby you can download for free. Just type in your browser Chart Nexus, you can download for free. Okay, another one is Trading View, in which is in the web browser, so you can just navigate through. Okay, so these are the two popular. Of course, we also have Bursa Station and other software. And the most important thing is when you have a trading platform, you also have a trading software. Some of the trading platform, I mean, like for example, your RHB, your Kenanga, your CIMB, they also leverage on TradingView, and some also leverage on Chart Nexus. So it's basically the same. Okay, so go straight to the topic for today. So stock market cycle. This is the most important thing that we need to know. So there are three cyclical movements in the chart. Okay, we have uptrend chart, downtrend chart, and also sideways. So what do we mean by a trend? Okay, so I remember in my secondary school or even primary school, if I want to draw a trend, there are two points in which I just connect the 2 points together. Okay, so if my line, the line I have connect more points, they are the stronger the resistance or support the line resembles. Okay, so a symmetrical channel is often drawn to confirm the uptrend, downtrend, and also sideways. So when we draw the trend, it's also we can consider those are supports and resistance. Okay, so these are all academic. So later I'm going to go through the examples. Okay, next I'm going to share about the uptrend chart. So what is an uptrend chart? If you can see from the line, the uptrend meaning to say it's going up. Okay, an uptrend chart is spotted when we have higher highs and higher lows, and we have a symmetrical resistance and support heading up. Okay, and then it's easy. Okay, for those who want to operate or trade based on the uptrend chart, it's easy to operate. We can consider to buy when it reaches the lower channel, which is the support. So why the company or the chart consistently going up? There must be a reason. So okay, the company is growing consistently, having higher year on year or also quarter on quarter. So the company is growing. So when it is growing, the profit they are making is more and more. So it will gain more attention from the market or from the retailers or even from institution investors. So people will start to invest in. So when people start to invest in, the stock price will go up because the demand is more than supply. Okay, so when the chart is moving away from the channel, it might signifies a reversal. Okay, so let's go to the example. Okay, if you see this platform, okay, the picture down here is taken from the Bursa marketplace. Okay, so these are the line chart. So if we can see, this is an uptrend chart. Okay, this is for public bank stock from 2005 until 2018. Okay, so you can see along the years it's going up. How we can see it's going up? Easy. We have a higher highs and higher lows. You see the low point, the high point. Okay, so this is what we call as an uptrend chart. Okay, so I'm going to use the example inside the chart nexus. So we look at this chart, which is a Hata. Okay, so of course the chart I'm sharing is just for educational purpose. It's not the latest one. Okay, if you see the Hata now and the Hata before, the price are completely different. But then this is just to show the example of a Hata, just to show an example of an uptrend chart. Okay, see low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. Okay, so you can see from here is an uptrend chart. Okay, so same goes to Gtronic. So before this point is an downtrend, then this is the point of the reversal. Okay, so higher low, higher high. Okay, yep. So like I mentioned on the second point just now, I can just draw a line connecting all the high points and also another line connecting all the low points. Okay, so you can see there's like a channel. For me, it's like a train, like a train, like a train. The ah, you can this is a channel. This is a channel. Okay, so how we can operate on this chart? How we can operate on the uptrend chart is basically we buy at support, which is the lower line here is the support line, and then the upper line is a resistance. Okay, so one way we can operate with this chart is we buy at support or we buy at low points and we sell at higher point, which is at the resistance. So if we are a disciplined trader, so we buy here and we sell at the resistance. Okay, so one trade, second trade, third trade, yeah, this is just a recommendation. Okay, so if you are busy or you don't have enough time to monitor, another way is we can sell when the chart exceeds the uptrend channel. So for example, you just buy here. So as long as it still doesn't break the channel, you can continue to hold, and we only sell when the chart exceeds the uptrend channel. Okay, this is just another strategy. Okay, next we talk about a downtrend chart. So what is actually a downtrend chart? Downtrend chart is defined when we have a lower highs and also lower lows. So there's like uptrend channel, like the uptrend chart, there's a symmetrical channel, which is the resistance and also support heading down. Just now uptrend chart is heading up. Okay, so for downtrend chart is heading down. So only operate for rebound purpose. Okay, for me, do not try to operate in a downtrend chart unless there's a rebound or a reversal happening. Okay, do not hold it for long and can consider to buy in when it reaches the lower channel or the support. Sell it before it reaches the resistance. This is for those who have time to monitor, which I think it doesn't suit everyone. For me, it doesn't suit me. Okay, so why the downtrend while the chart is having a downtrend chart is because the company might be facing or experiencing losses for a few quarters or years, so a lot of people is selling, so that's why the chart is going down. Okay, so for example, this is one of our oil and gas stock in our Malaysia from 2017 to 2018. Okay, the duration, so you can see it's a downtrend chart, lower high and also lower lows, if we can see. Okay, straightforward, and then you can see the volume here is increasing, meaning to say a lot of people is selling. Okay, so first advice is avoid operating in downtrend chart. Do not operate in a downtrend chart because you might have a hard time to see when is, because unlike the uptrend chart, we can buy at support, sell at resistance. For example, this chart you can see we can only buy here. If we miss selling at this point, so most probably, if we do not have discipline, we'll continue to hold until we have our gain widen, our loss widens. Okay, so only consider when it leaves the downtrend channel or there's a reversal chart pattern. For example, in this Astro chart, there's a downtrend until there's an uptrend. Until there's a reversal. You will see there's a high volume buying here. There's a high volume. So it breaks the downtrend channel. So only consider to buy in this situation. Okay. If not, simple say avoid. Okay. Next is a sideways chart. Sideways chart we have a uptrend, downtrend, and also sideways. Sideways is defined when the chart is having a cyclical ups and downs. So within a certain boundaries for a few months or even a few years. Okay, because we have Malaysia, there's a few stocks in sideways chart for a long time. Okay, so within the resistance and support, it remain directionless. It just go up and down in the same direction. Okay, so how we can operate is can consider to buying when it reaches the support and sell it, or before it reaches the resistance, buy at support, sell at resistance. But then the margin, the gap between your profit might be small because the support and resistance, the gap might be small too. Okay, so for an example, we have one of the poultry stock in Malaysia, CAB. So you can see there's actually I can draw a support and a resistance. Okay, so the chart is just going sideways for like 1 year. doesn't go much. So if let's say we buy a support, sell resistance, buy a support resistance, so this is the one, this is the profit we can get. Another one example is Ely. This stock is already delisted in Malaysia. Okay, so it's no longer there. So you can see it's going sideways. Okay. Next, as another example, one of our biscuits in Malaysia. So if you look at a Hub Sen for a long time, it is just going sideways. Okay, of course, this stock is a very good dividend stock. Okay, going sideways for I think for 2 or 3 years. Yeah. Okay, so the way we can operate is buy a resistance. Sorry, buy a support, sell a resistance, buy a support, sell a resistance. But we just need to wait for a long time. For example, the time frame here is like 4 to 5 months. Okay, so okay, all about uptrend, downtrend, and also sideways. So I hope all of you are clear of the uptrend, downtrend, also sideways. So the most important is we avoid downtrend chart. We we avoid downtrend chart again. We avoid downtrend. We only focus at uptrend or even sideways. But first measure, we focus at uptrend chart, which is easy for us to operate and it can guarantee more profit. Okay, so we talk about technical indicator. So what is actually technical indicator? Why do people come up with a technical indicator? Okay, so a technical indicator is basically a mathematical pattern derived from historical data. We need to understand for technical analysis, basically is coming from the calculate, is from analysis. We with all the data that we have, we try to predict the future. Okay, using the data we have, we try to predict the future. So we can also say garbage in, garbage out. Whatever input we have, okay, whether it's quality data or not, it will testify and justify, it will probably disrupt our future. Okay, so in this technical indicator, okay, so if we have a few technical indicators, we can remove some of the assumption or hypothesis that we have. Okay, so technical indicator uses a mathematical formula to derive a series of data points from past price, volume, and also open interest data. So why is technical indicators important? Because it can be used for our trading decision by analyzing them either on standalone basis or when combined with another indicators or chart patterns. So like I say, alone, one technical indicator is not sufficient. Okay, it must, for me, it's better to come with another indicators to confirm. For example, when we are driving, okay, when we want to go from the left lane to the right lane, what do? We pass on the signal light. Okay, okay, we on the signal light to the right. Is it we on the signal light we can terus pushing? No. Okay, when we pass on the signal, we need to look at the mirror. Is there any car approaching? We confirm first. If there is no car approaching, then we can turn right. It's the same analogy here. So technical indicator, if we combine, we pass on the signal light, okay, then we see confirm with another indicator or confirm with another analysis, then no car, then baru we go to the right lane. It's the same thing. Okay, so in this forum, in this webinar, we're going to talk about the most fundamental and yet the most important useful technical indicators, which is moving average. So I'm going to share an example. I think I'm going to share lots of example on how we can make profit. Some trades are losses, but as long as your profit is more than your losses, then for me, that's considered the best method. Okay, the moving average. So what is, okay, we go through all the academic parts first. What are moving average? So it is a technical indicator that market analysts and investors may use to determine the direction of the trend. Okay, they use the moving average to determine the trend. So it sums, okay, this is just a mathematical, sums up all the data points and divide by an average. So why is it called moving? Okay, it's called moving average because it's continually recalculated based on the latest price data. So because of the advancement of our technology, okay, we do not need to draw the chart or calculate in Excel or whatnot. We can just have everything with one single click in our platform, Chart Nexus, also Trading View. We can have all the moving average already. So later I'm going to share in the trading view. I mean with the ETS, because ETS is leveraging on trading view. So I'm going to share how do we summon the moving average from the chart. Okay, so there are basically two types of moving averages. One is we call it SMA, simple moving average, and another one we call it exponential moving average. So the difference between SMA and EMA is the sensitivity. For exponential moving average is more sensitive as compared to SMA. So in this session, for me personally, I prefer to use simple moving average because I understand the analogy of it. So if you are prefer EMA is also okay. It's basically the same pattern. Just the same application, just EMA is more sensitive. Okay. So this is the example. The calculation of simple moving average is summing all data divided by number of days. So SMA, simple moving average, can be computed for 4 different types of prices, such as, because in the chart, so in the candlestick pattern, we have open price, close price, what is the highest, and also low price. So SMA can be computed using all these methods. Okay. So for example, we take the closing price from day 1 to day 7. Okay, you look at this table. So there are day 1 and day 10 until day 10. So we have the closing price for the chart for the stock, and then also the average. You see, I'm taking the average for 7 days. Okay, so 5.83 is basically the average average from day 1 to day 7. So I have 5.83. Second average is from day 2 to day 8 is 5.91. Day 3, third average, and also fourth average. So with these 4 simple moving average, I can already plot a chart. Okay, 5.83, 5.91, 96, 98. So it's consistently going up. Okay. So another interesting example that I think if you notice in my Facebook, I also draw a simple moving average. I think during the pandemic time, during the COVID, because we have the data of how many people being affected, and then how many people pass away, or how many people recovered from the COVID. So I use a simple moving average of a 7 and also 14 days. With the data I have, I can also see, try to predict whether the cases are going high up or going down. So I was quite surprised. Okay, not quite surprised. I'm quite impressed with the utilization of the simple moving average. So it basically tells us when is the time. Are we going to have another lockdown, or it just give us a prediction? Okay, all these predictions are valid because we are doing based on the data that we have. Okay, another example, because now is the durian season. This is what I've been doing. Okay, so I have a few vendors, okay, a few contacts which WhatsApp me the price of the Musang King daily. Okay, so basically I use those data. They'll tell me, like, for example, 1 kilogram of Musang King A is like 55 ringgit or 75. So the price is fluctuating. So what I do is I use the data. I do an average, a moving average, so I can roughly know that maybe next week will be a downtrend, meaning to say the price might go down. Okay, I just use the data I have, and I try to predict the future. So this is some usage of the moving average. Okay, just some example. Okay, so we look at next slide. Okay, now we go to the application. Okay, in the chart. So I'm using simple moving average 20 and also 40 to operate on a midterm stock. What do I define my midterm? Midterm is actually less than 6 months. Okay, so you might be asking me, why do I use 20 and also 40? Okay, because in 1 month we have 20 working days. 20 working days. So that's considered as SMA 20. So 40 is 2 months. So I'm using the prediction for the past 1 and 2 months. I'm using the data of the past 1 and 2 months to predict the 6 months ahead. Okay, I repeat again my sentence. I'm using 1 and 2 months of the previous data to predict 6 months ahead. Okay, so when a particular chart, when there's a golden cross, what do we define by golden cross? Golden cross is when the simple moving average 20 golden cross 40. Okay, this is the first criteria, golden cross. Second is when the candles are above the two lines. Okay, so these are the two important elements. So if it meets these two elements, the chart is in an uptrend in the midterm. The chart is in uptrend in around 6 months. Okay, so reversely, if a particular chart we have a death cross, which is SMA 40 death cross over SMA 20, and the candles are below the two lines, and it's in the downtrend. It will be downtrend in the midterm. Okay, so this is the first impression when I try to explain what is SMA 20, 40, death cross lah, golden cross lah, candle below, up lah. Okay, I put it in a simple analogy. Okay, for example, okay, we have two guys here. Of course, the fat one is 40 kilo. Okay, assume 40 kilo, okay? And then the skinny one is a 20 kilo. They want to go up a stairs. Okay, so if a 20 kilo carrying up a 40 kilo up the staircase, okay, imagine 20 kilo carry up a 40 kilo up the stairs. Okay, definitely when they go up the stairs, the 20 kilo will have his hand broken, patah tangan, because he need to carry the weight of 40 kilo. So he will use a lot of energy to go up. Okay, so same. If you see here in my technical analysis here, in the moving average, I have set moving average 40 to be the red line, and then also moving average 20 to be the blue line. The same analogy, red 40, blue 20. If remember our case study here, when the 40 kilo, okay, when the 20 is below 40, meaning to say 20 is carry the 40 kilo. Okay, when the 40 is above 20, it's a death cross, because the 21 will suffer. Okay, so you see here, when the moving average 40 is above 20, okay, so it will continue to go down. And then remember our second criteria, what we say just now, if the candles are below the two lines. Okay, you look at my box here, my text box. There's a SMA 40 death cross SMA 20, which happens in this line. SMA 40 is the red line, SMA 20 is a blue line. There's a death cross, and then the candles are below the two lines. You see the candles, these are the candles below the two lines. The chart is in downtrend for the midterm. You can see downtrend for the midterm from March until July for around like 4 months. So these are the charts considered downtrend chart, which we should not touch at all. Okay, so downtrend chart, which further justifies by our moving average telling us SMA 40 death cross SMA 20 and the candles are below two lines, confirm downtrend, don't touch. Okay, okay, clear as of now, downtrend, don't touch. This is the part of the prediction that we have. Okay, the SMA gathers the data from the past 1 and 2 months and help us to predict the future, that in the midterm is a downtrend, don't touch. Okay, so imagine another case whereby we have 40 kilos carrying up a 20 kilo up the staircase. Okay, just now is 20 carry 40, now is 40 carrying 20 kilo. Definitely it would be easy for the 40 kilo. Okay, right? The 40 kilo meaning to say have more energy to carry a light thing, it will be easy for him. Okay, same goes to the chart here. Okay, we look at this chart, Penta in 2018. Okay, you see again moving average 20 and also moving average 40. 20 is a blue line, 40 is a red line. Okay, so there's a golden cross. Okay, let me say there's a cross. There's a cross. Okay, so SMA 20 cross over 40. The blue line cross over the red line, and then the candles are above the two lines. So the chart is in uptrend position for midterm. Okay, I'm using the data from the past 1 and 2 months to predict the midterm for the next month, next 6 months. So whenever there's a golden cross, which is 20 cross over 40, and then the candles are above the two lines, then it continues to go up. Okay, for me, let's say if I buy at this position at this time around 2.3, so I will not sell unless there's a death cross, which is 40 cross over 20. Okay, yep, I hope as of now, I hope everyone is clear. Okay, hope everyone is clear. Okay, next we talk about I'm using simple moving average 20 and 40 at particular and individual charts, but actually this moving average we can use to define on the whole market whether it's a bull or bear. Just the moving average we are using is slightly different. Okay, for index we call it index, we are using moving average 50 and also 200. Okay, it's the same analogy. Okay, if the index, okay, index, okay, not particular chart, is an index. If 50 cross over 200, okay, the candles are above two simple moving average, the index is in bull market. Okay, if a particular, sorry, index, sorry for the error. If a particular index, okay, SMA 200 death cross 50, the candles are below the two moving average, the index is in bear market. Enough said. Look at the example. Okay, this is our FBM KLCI. So if you look at the chart here, I have moving average in the blue and then also moving average 200 in green. The same analogy. People tend to get confused like 50 over 200 or 200 over 50. Just imagine 200 carry a 50 kilogram. So it would be simple. Okay, so we see there is a there's a crossover in this area whereby 50 cross over 200. When 50 cross over 200 is a golden cross, and then the candles are above these two lines. You see, candles are above these two. These are the candles above these two lines, meaning to say it's a bull market. Okay, so meaning to say for the FBN KLCI in 2018, it tells us this is a bull market. You can go in. Okay, and then we look at this line. There's another crossover whereby 200 cross over 50. And then the candles are below these two lines. So this is a bear market. So whatever we have, we try to stay away. Stay away from trading, or if we don't have any good opportunities, we stay away from the market. Okay. So next we look at FBM ACE market. The same example. So we have 50 golden cross. Again, 50 is the blue color. 200 is the green color. So when the 50 cross over 200, and the candles are above the two lines, okay, the two lines here meaning the moving averages line, crossover, candles above, buy. Sorry, it's a bull market. Okay, bull market until the next point is when the 200 death cross 50, and then the candles below the market is a bear market. So if you see from the particular chart and also the index, well, we are just simply repeating on the two items. Okay, moving average 50, moving averages line, and also the candles. Okay, so when to buy and when to sell. Just now we talk about when to buy. We know the market, we know from the trend, golden cross is an opportunity for us. So actually, when is the time for us to buy, and when can we sell? So I have some of the illustration, which I think is I have already been practicing it for the long time. I mean, for the past 8 to 9 years. So I think which is useful to me. So if you observe in my Facebook post, I also mostly the first indicator I'm telling that if there's a golden cross or the death cross. If there's a golden cross, meaning to say we can monitor. Okay, that's my first criteria actually. Okay, so we see here there's a death cross whereby 40 cross over 20, and then the candles are above, below two lines. So basically it's a bear market. It's a midterm is going to be a bear market. Okay, then there's a crossover whereby 20 crossover 40, but then the candles are below the candles are below, meaning to say, because just now we mentioned that there are two criteria, there are two elements that need to fulfill. One is the cross, or the gold. If for golden cross, the candles need to be above two lines. Okay, so if it's a death cross, the candles need to be below. But then this only meet one of the criteria. Okay, so this is a golden cross whereby the blue line is above the red line, but then the candles are below, meaning to say it doesn't fulfill the two criteria. So even though there's a golden cross, but the breakout is not successful because the candles are below the lines. Okay, for us to operate, okay, for us to safely say that it's an uptrend or a breakthrough is successful, need to fulfill two points that I mentioned just now. But then in this situation, it is false alarm. Okay, the breakout is not successful because the candles are below the lines. So stay away. Then here also the same. Okay, there's a golden cross whereby 20 cross over 40, but then the candles are below. So false alarm. No need to talk. No need to look at it. And then this, you see, there's another 20 cross over 40. Sorry, 20 cross over 40. Okay, and then the candles are above two lines. Okay, so this is an opportunity for us. Okay, so okay, like I mentioned just now, two criteria. One is the golden cross, and then candles will stay above two lines. For me personally, my own preference will be I will buy in at day 5, because sometimes they might give us false alarm also. Okay, the golden cross happens, candles above two lines, and then within the next trading days, maybe 2 or 3 days, the chart will fall down again. Okay, for me, my safety margin is I will normally operate at, I'll look at day 5 unless there is a nearest resistance or support. Okay, so this is just purely on operating based on moving averages. I didn't add in the elements of, let's say there's another chart pattern or candlestick pattern or resistance pattern in. This is just purely on the moving averages. Okay, so there's a golden cross, candles above, so I monitor for another 5 days. So at day 5, okay, I'm comfortable, okay, I will buy in. For example, 1 2, okay, then when the golden cross happen, day 1, day 2, day 3, day 4, day 5. So imagine I buy in at 0.69, okay, 69 cent, and I maintain the position because I do not see any death cross yet. So I maintain my buy position, and my profit will still running at 30%. How do I get this 30%? Is basically from the last day of the chart is around like 90 cent. 90 cent minus 69 is around like 30%. Okay, this is how I utilize the moving average alone. Okay, so like I mentioned just now, it's best to use it together with other technical indicators such as your resistance, your support, or even your candlestick pattern or your chart patterns that you have. Okay, next example. Oops, okay, you can see this is already a downtrend. This is a downtrend from top to bottom. So downtrend chart, we don't touch. Oh, it rhymes. Downtrend chart, we don't touch. Okay. Okay, now look at this chart. We have DNO. Okay, we have DNO. Okay, so again, similarly, there is a golden cross whereby 20 above 40, and then the charts, sorry, the candles are above two lines. Okay, candles are above two lines. And then here you can see there's actually a death cross, meaning to say 40 cross over 20. Okay, and the candles are below these two lines. Okay, and there is also another death cross here. Okay, so imagine we monitor first during the golden cross, and then the candle stay above the two lines, and then we monitor for 5 days. Okay, so assume after the 5 days it's a 0.32, so I buy at 0.32. So I continue to maintain my position until I saw the death cross. Okay, for example, for here there's a death cross, and then the candles are 5 days Okay, the candles are below the lines for 5 days, then I can sell. Okay, for example, at this line, okay, 1, 2, 3, 4, 5, around 60 cent. Okay, I monitor, I saw a death cross, I need to take note. Death cross happening, meaning to say the chart is going downtrend, is turning to downtrend. So when the candles are drop below the two lines, okay, 1, 2, 3, 4, 5, 5 days, or you can straight away sell at that when the death cross happens. So I sell at 60 cents, so I profit taken at 88%. Okay, okay, clear, fine with me. Okay, next, there's another golden cross happening. Okay, so I monitor for 5 days. Okay, then the candles are above the two lines, I buy at 65 cents. Okay, and then after a period of time, there's a death cross. Okay, but you see the chart is dropping very fast. Okay, so I monitor for 5 days, 1, 2, 3, 4, 5. Oh, it's already dropped until 60 cents. So I cut loss, I sell, and I cut loss at -8%, because the way I work is golden cross, I monitor for 5 days, and then I buy at day 5. Death cross also the same. There's a death cross, candles below two lines, I sell at day 5. So for this trade, I'm actually making loss of 8%. But if I compare to my previous one, I already profit taken 88%. So for this trade, I'm losing 8%. Okay. For me, technical analysis is purely about discipline. Not to mention that first about discipline, and next we must do whatever necessary for us to do. We must reduce losses. Okay. So even though for this trade I was losing 8%, but it's okay because before this I've actually gained 88%. Okay. So next I monitor, I saw there's another uptrend chart. Sorry, there's another golden cross, and then the candles are above the two lines for the above the two lines for 5 days, and I buy at 0.65. Okay, around this area here. Okay, and then up until the chart here in October 2018, my profit is still running at 35%. Okay, so this is how we utilize the golden cross, candles above two lines, and buy at day 5. Okay, another example for top glove. Okay, this is a quite recent one from 2020 until 2021. Okay, so you see here, I know top growth is there's a lot of bonus issue happening for the during the COVID season, the pandemic season, whereby one bonus of one share, he gave two shares. Okay, so this is already been, the price have been adjusted. Okay, so there's a golden cross, 5 days. Okay, assume golden cross, candle stay above two lines, we buy at 1.2. Okay, continue to go up until we notice that there's a death cross, and then the candles drop below two lines. Okay, which is, I think, is already mostly at the lowest point, because we stick to our strategy. We monitor for 5 days, we buy at day 5 or sell at day 5. Okay, sell at day 5, we sell at 5.2, which is considered the lowest one. Okay, so profit taken, even though of course for technical analysis we cannot always like buy at the bottom, buy at the lowest, sell at the highest. So far we might coincidentally have that thing happen, but not always. Okay, nobody is not so accurate lah. Okay, so take it easy. So for this case, we profit taken 333%. Okay, so then we monitor there's another golden cross. Okay, and then we know that during that time pandemic, Maman, top glove, everyone, glove counters are going hysteria crazy, so everyone buys in. So we notice there's a golden cross. Okay, and then there's a death cross here. So assume, because the death cross we only monitor because it's a daily chart, right? So we only saw that there's a golden cross, candles above two lines, monitor for 5 days, then we buy in. We never know what will happening on the right hand side here. Okay, so buy at 8 ringgit. So suddenly there's a death cross happening. Okay, then candles drop below 2 lines. You can see the momentum, the steepness of the chart, meaning to say it happens all in a short while. So we monitor for 5 days, we cut loss and 6.4. So we already cut loss at already lost 20%. Okay, but then of course it's compensated by our 333%. So one thing to take note here. So do we want to still want to stick to our strategy of golden cross, stay above 2 lines, buy at day 5? Something for you to ponder. So what I have been using is golden cross happens, candle stay above 2 lines, and then I will combine with support and resistance, or I can see from the chart patterns or even the candlestick pattern. This is how I utilize or I strategize for my trades. Okay, so because for technical analysis, every day is a learning day. Every day is a learning day. So meaning to say, we learn from our mistake. We know that we want to reduce our losses. Because for this case, you see, if you sell at day 5, you see the rapid drop. You by right in when this death cross happen, we can sell at 6.8, but we monitor at 5 days. We monitor for 5 days. Then we sell at 6.4. Do you see that? We can sell at 6.8, but instead of 6.8, we sell at 6.4. I know there's a 20%, 20-cent gap here, but we need to find a way, or we need to constantly improve how we can try to reduce our losses. I mean, as a person, we try to be better and better every day. Okay, better than today to be better tomorrow. So we must repent. I mean, we must think, what have I do wrong, or how can I improve in every trade? Okay, of course you can still stick to the same analogy like previously I have sell at day 5. Definitely no problem if you're comfortable with that. If you want something, if you want a better result, so these are the things that you need to monitor. You need to try to apply and see whether the strategy is successful or not. Okay, because trading is about, is a daily life, is a learning stage. Okay, so okay, after this death cross, it tells us that death cross telling us that they are going to be a downtrend chart for the midterm, which is for the 6 months. So see, no, December until October, so 10 months. So that's why we do not buy downtrend stock, because it's going down. If you can see from here, we can see a downtrend already. Even the death cross tells us that they're going for downtrend. Okay, that's why we are not going to buy or touch on the downtrend stock. Okay, so another example that we have, I think I have a few examples. Okay, or this is Heineken, Malaysia. So for example, there's a golden cross happening, candles above 2 lines. Day 5, we buy in, and then here there's a death cross. There's a death cross, 40 above 20, candle stay above us. Candle stay below the 2 lines. Day 5, we sell, we take profit. So golden cross, candle stay above 2 lines, buy 15.6. Then there's a death cross happening, candles drop below 2 lines, and then we sell at 16.4, more or less at this value. So profit taken at 5%. Okay, so there's another chart here, golden cross happening, okay, above 2 lines, buy at day 5 is around 18.4. Maintain position until here, candles drop below 2 lines, there's a death cross and drop below 2 lines and sell at 19.6 with profit taken at 6%. Okay, so if you only apply these moving averages, then you can take profit at here. But if you look at the chart pattern, the candlestick pattern, you actually see that there's like a bearish harami over here. So you know that bearish harami is a kind of a weak reversal. Weak reversal meaning to say there is a reversal, but the reversal might be weak. Okay, so you can combine with other patterns. So if you know that, oh, there's a bearish harami over here, so you might selling at around 21.2. Okay, it's all up to your preference. These are all recommendation how we can improve. Okay, so Next, there's a golden cross, there's a death cross. And then golden cross, candle stay above two lines by 22. 1, 2, 3, 4, 5 by 22. And then there's a death cross, and then candles drop below the 5 lines. Okay, let's say we sell at 21.2, so cut loss at 4%. Okay, so these are all analogies that we can use, all strategies we can use, the recommendation. Okay, of course, not to say the strategy I'm sharing is applicable for everyone. So far, what I'm sharing is the strategy are useful and applicable for me, which I think it can be applied to you as well. Okay, but just need some practice. Okay, so okay, now we look at one of the plantation and the wood stock. Ta'an. Okay, there is a golden cross, candle stay above the two lines for day 5. Okay, we buy, maintain position because there is no signal for us to sell yet. There is no death cross yet. There is only death cross after like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 11 months. There is only a death cross after 11 months. Okay, so this is another psychology I'm trying to say. Sometimes when we buy a stock, there is no signal for us to sell, but every day we keep on monitoring the stock. We also panic. Say, hey, when is the time? When is the time I want to sell? Like, you're not feeling comfortable. When is the time for us to sell? I have that feeling. I think maybe most of us also have that feeling. We buy, there's no signal for us to sell. But since we are monitoring every day, we also panic. Not panic, also become panic. Okay. So this is some of the psychology that we need to face, and we need to have a way on how we can treat it. Okay. So here there's a death cross. The candles are the candles are below the two lines. We sell at day 5. Okay, so we buy at 2.5. Let's say drop death cross, candles drop below two lines, we sell at 5 ringgit. So profit taken at 100%. Okay, so we make a handsome 100% for the 11 months. Okay, the next is the duration is 11 months. Can we really hold a stock for 11 months? Things like that. So there are some psychology that we need to think of too. So if we only apply moving average, so if we look at the chart pattern, if you see that here, there's actually a bearish engulfing. For me, bearish engulfing is a strong chart reversal. It's a strong downtrend reversal. So if you know, if you study or if you go and analyze what is a downtrend, sorry, the chart patterns, you might already take profit at around 5.9 or 6 or 5.7, yeah, instead of 5. Okay, so what I'm telling here is moving average, definitely you need to combine with another knowledge to best use or best bring up for me to maximize your profit. Okay, so again, life is about learning. Trading is also about learning, apply, and try to improve day by day. Okay, I know I talk too much on about this thing. Okay, sorry, but it's all about learning. Try to apply, try to learn, and we apply to be better. We try to have better trades day by day. Okay, so okay, important recap. We only say it's bullish or uptrend in the midterm when SMA 20 golden cross SMA 40. Remember what is SMA 20? It's a 1 month trading, 1 month of trading. Okay, if golden cross SMA 40, I use the past 1 and 2 months to forecast the next 6 months, the trend, the direction for the next 6 months. Okay, it's only bullish when 20 golden cross 40 and the candles stay above the two lines at least 5 days. In my example just now, I was saying that we buy at day 5. Okay, so 1, 2, 3, 4, 5. Okay, we buy in, and then we only sell when there is a death cross, and we monitor. Okay, for my case here, I straight sell at next day. meaning to say the next day I straight sell, or you want to monitor for 5 days, up to you. Okay, so I recap again from the text box here. Golden cross, candle stay above 2 lines, buy at day 5, which opening here is 2.33. Okay, 2.33. And then we monitor, maintain our buy, our position. Then suddenly the candle start to drop. Okay, and then there's a death cross, and then we straight sell at next day. So we sell at the next day opening, which is 2.1. So we cut loss at 10%. Okay, even though we saw we are losing 10%, be brave, be bold, we cut loss. Because if we do not cut loss, it will continue to fall down. Our loss will widen, become bigger. Okay, and then the psychology that we have is, oh no, I already lost 10%. If I don't cut loss, the loss will widen 10%, 20%, 30%, and then it's harder for us to cut loss. So be disciplined. Okay, be disciplined. So I think that's all we have. And then let's look at other examples, chart nexus and also trading view. So I'm going to use a few. Okay, for those of you who are using the chart nexus, I'm just going to bring my chart nexus here. Okay, how do we actually summon the moving average 20 and also 40? Okay, simple. You can try this later. I'm teaching I'm sharing in the chart nexus. Later I'm going to share in the trading view how do we summon it out. So if you see the indicators here on the left hand side here, there's a toolbox here. Moving average, you can just click 1 and 2. Okay, so because I already preset, okay, moving average 20. Okay, so there's an edit button here. I can click on the edit. So okay, indicator name, moving average 2. Sorry, supposed to add the moving average, this one, moving average. You can, if you want to rename it as SMA for 20, also can. It's up to you. So it's a 20. Remember, I'm using simple moving average. I'm not using exponential. Okay, exponential is more sensitive, so I just use SMA 20. The type, like I mentioned just now, there are 4 types. Every candle have open, high, low, and close. For now, I use close, and I change the color to blue. Okay, so I just click apply and close. Then I see everything already. Same goes with moving average of 40. Okay, 40 also the same. I just need to change the period here to 40. Okay, if I'm using close for my moving average 20, so I'm gonna use close, okay, for my second moving average, and then I change the color to red, so it will be simple. For example, for this chart, okay, let's say I just focus at here. There's a death cross. Death cross meaning to say they are using the past 1 or 2 months to forecast that for the upcoming 6 months, there is going to be a downtrend. Okay, so I do not touch on the Bursa chart. See, death cross happening here, death cross happening here, and then it falls down until there's a reversal here. Okay, there's a golden cross, and then the chart is stay above for 5 days. I can buy in at around like 6.3, and then I continue to hold, and then there's a death cross here. Death cross. Okay, if you want to monitor, if you want to sell on the next day, or you want to monitor for 5 days, then you sell. Okay, so these are like the profit margin that you get. Let's assume you sell at we monitor for 5 days around here, so you can make a handsome 10% profit. March, April, May, for 3 months, 10%, which I think is quite good. Okay, because we are not a trader, we're not active in the market. We only look at moving. We only use the average moving average as our technical indicator. For me, this 10% is quite handsome. If we continue to practice and use this strategy, so it will be good. Okay, so yeah, so this is how we use the chart nexus, moving average 20 and also 40. So later I'm going to move to Bursa Equity Trading Simulator, the ETS. So in the ETS, one of the, okay, I'm going to go walk through the equity trading simulator, but I think most important, I'm going to bring out how do we summon the chart analysis and also the moving average 20 and also 40. Okay, so okay, we need to be thankful because our Bursa is actually very good. They have been trying their best to help the retail investors, okay, to help us in particular. So they actually created a platform for us to try to have a play trade. For me, it's like a play trade. So if you enter the website, okay, so okay, later I'm going to demo also, and okay, the most important is I'm going to share. This is the trading analysis tool in the Bursa ETS. I'm going to teach you how do I change my setting from the up to the bottom. Okay, so you can see the line here. I summoned the moving average 20 and also 40, and then I change the background to white color so that I can see clearer. Okay, so before I went into the browser, okay, just a quick introduction. So it is just like our normal platform. We have a control panel in which I call it as control panel here on top here. We have code, watch list, stock info, chart, buy, sell, analysis, portfolio. All this we call it as control panel. Next, we have the highlight. So you see the line here. This is actually a highlight in which from this highlight, we know that today, how is our market? Is it going up or down? How many trades? How many value? How many stocks going up and down? How many stocks being traded, untraded? So these are the highlight for the day. Next, we have the three windows here. Tingkap 1, tingkap 2, tingkap 3. Okay, so the three windows here. I have my quote screen, my analysis chart, and also the stock info or tracker. So all these thing is customizable. Okay, we can customize whatever we like. Okay, so number 4 is the tab. You see here, I have quote screen. I can have another tab. I can actually have the analysis chart as a tab inside the first window. Okay, so some important signs, I think it's okay. This one is okay. Later along the way, we can just try and error. Okay, so these are all what I'm going to share in the next 30 minutes, how to basic maneuver the trading platform. But I think I jump straight to the add in the technical indicators. Okay, so I'm going to summon my trading view. Sorry, my Bursa Academy. Okay. Yep. Okay. So okay, just now I have okay, we start from login. So I try to log out first. Should I want to log out? Yes. Okay. So this is the front page that we have. The Bursa Academy Marketplace. Okay, I will just share this in the chat room so that we can go through this together. Okay, so you can see that there's a moving introduction here. So we just click the next button, next bubble until we see this prepare yourself for the real world with the equity trading simulator. Okay, we just click in practice now. Okay, the reason why I think because just now I was logged in. Okay, so it directly bring me to my login page. Okay, so for those, if let's say you haven't logged in, okay, wait, let me just try to. I think it's okay. I think okay, yeah. For those who haven't created an account, you can create your own account. It's just a basic registration whereby you key in your username, which is your email, and also your password. Okay, then when you click login, okay, then you come to this page. Maybe I give you guys like 2 or 3 minutes to just to try. So it's actually very simple. It's just like you have an account, registering an account. Okay, register an account and then you can try to trade. Okay, so in this ETS, the simulator, everyone is given a certain amount of money. Okay, I look at the portfolio, equities portfolio. Everyone is given 100K, virtual 100K. Okay, it's not the real money 100K, it's a virtual 100K. So if you see in my just now in my equities portfolio, okay, I have bought two stocks. You see, we have Lihan and also TSH. Okay, these are all example. Now you can see how much I bought in. Okay, how do I see? I go to my average buy price, which is 0.85. I bought Lihan. So for TSH, I actually bought at 1.03. Okay, I'm not sure why the system is 1.029, but it's supposed to be 1.03. Okay, so we see from left to right. Okay, this is the last price, the closing price for yesterday. Lihan closed at 0.815, TSH closed at 0.985. Quantity at hand, meaning to say how much I bought. I bought 5,000 shares for both Lihan and also TSH. So my quantity sell, I haven't sell it. I'm still holding. Okay, the last price is the current latest price at 11:10 a.m. Now Lihan is 0.81. Okay, and then TSH is 0.995. So the market value is basically my average, my buy price times my last price. Okay, so here we have the unrealized gain or loss. You will see it's negative, meaning to say I'm losing 200 for my Lihan. I'm losing 168 ringgit. Okay, 169 for my TSH. Okay, this is the equities portfolio. Okay, so again, come back. We are given 100 ringgit virtually for us to trade, to play and trade. Okay, virtual trade. Okay, so coming back to the one of our intention for today, the chart analysis. So we click on the chart. Okay, we click on the chart. Then we have intraday chart and also analysis chart. Intraday chart is the one like my bottom here. Okay, so before that, you can all customize your your lookup. We have layout 1, layout 2, layout 3, layout 4. It's up to you. Okay, for me personally, I'm more comfortable with a layout 1 here. Okay, all right. So now we're going to summon. I saw a chat in the NARS. Intraday chart is basically this one, meaning to say from 9 o'clock until now, how is the trading? Wait, let me just bring out. Let me bring it out. Okay, for example, let me look at one of the stock. Okay, we look at one of the active stock, DNEX. So from 9 o'clock until 11:30 now. So how is the this is a minute chart. Every minute whether the chart goes up or down. Okay, all right. So I'm going to summon it down. Okay, okay. So okay, just check on my. Okay, come back to our analysis chart. Okay, we go to chart. We go to analysis chart, the below here. When we click out, there's a window will pop up. Okay, there's a window will pop up. So I can just maximize it, make it become bigger. So this is the same layout in the trading view. Okay, this is a minute. This is a daily chart. Okay, so how I'm going to change it, like what I mentioned just now, I'm going to change it from top to bottom. This is the one that you see, right? The black without the moving average. I'm going to change it to yellow, white background, and also I'm going to summon out the moving average of 20 and 40. So in order to do it, okay, first let's summon the moving average 20 and also 40. Okay, let me choose a stock first. Let me choose a stock. Let's call Busa. Okay, this is how we can click on the chart. Okay, there's a search here, search button here. So I just click Busa. So because this is utilizing from the trading view. So once every list, all the search list was out, so we click, okay, this is a 1818, our Busa. So I click on it. Okay, so the chart was out. The chart is out. Okay, so to summon the technical indicators, I right click on the screen, any part of the screen, as long as it's not outside the chart. Okay, anything inside, then you can see the go to date, reset chart, change symbol, change interval. Okay, okay, so we click in the insert indicator. Remember the topic for today, moving average is a type of indicator. So we insert indicator. So trading view, there's a lot of indicator that you can use. Accumulation, distribution, average, ADX. So for me, best is if we understand the analogy behind the indicators so that we can use it properly. Okay, so here's a MA with EMA cross, MA cross. You can use that also, but then I'm more comfortable with moving average here. So if you see just now when I click moving average, I already summon one of the moving average with the blue line. So I'm going to click again because I need two lines, which is moving average 20 and 40. So I click again. So see here, I summon another moving average. Let's say I accidentally click a lot. Okay, it's okay. So you see I click a lot of moving average. So how we can close it is, you see there's a when I mouse over, there's a delete button. So I just delete, and I left 2 for my utilization later. Okay, so now we see the moving average 9, moving average 9. So how do we change the setting? We change the format here. Okay, the format, you see there's 3 box, right? One close, one delete, one show or hide, one format, and then one delete. So I just click on the center one, okay, the format. So it pops up like this, the length. Just now we mentioned that is that we want 20 and 40, right? So for this length, we type in 20. Okay, so at the source, okay, there's an open, high, close, or low, and then there's a lot of I'm also not quite sure what is this, but it's okay. We choose the close, and then offset we just ignore, and then at the style, for me I say moving average 20. I always remember on the skinny guy, so it's blue in color. Okay, I just click, I want blue, so I click OK. So next for my moving average 9, again I click the setting, sorry, the format, and then I change the input to 40. Okay, the source is closed. Okay, I go to style, I click on this color plot, I change it to red color. I remember the fat guy 40 kilo who's carrying the 20 kilo. Okay, then I just click OK. So you already see there's a blue line and also a red line, but then because of the background which is in black color, it seems like it's a bit hard, it's a bit not visible. So what I do is I click on the anywhere on the right hand side here, right button, then I go to properties. Okay, so you can see style, scales, background. The background is the one I want to change. I change the background. This background is black in color, so I change, click it, I click to white color. Oh, so it's already in white. But then you can see there's a vertical line and a horizontal line, so I do not want this line to be there. If you want it to be there, can also, no problem. But then sometimes in technical analysis, if you have more lines, you might get yourself confused. So I might as well change it to white, white horizontal grid line, white. So I just close it. Okay. So again, right click, I go to properties. Yeah, this is where we can change all the background. Of course, definitely, I'm only sharing this. You can go and explore yourself. Okay, there's no harm in everything. Go try everything. Okay, there's a things that you can click whatever you like. Okay, the navigation buttons, visible, mouse over, or is it invisible, it's up to you. Okay, so now it's more visible with the white background. So when I scroll my mouse, up and down, I can actually zoom into the particular dates that I want. Okay, okay, so for example, just now we talked about Bursa, this chart. Let's say we look at another chart. Um, any example, any charts that we want to look at it? Let's look at the Petronas Chemical, PChem. Okay, so we look at here, we saw that there is a, we scroll up or down, we zoom into the nearest one, we saw that there is a depth cross, SMA 40 across SMA 20, slide is going down. Okay, so meaning to say this chart, normally we try to avoid avoid trading or avoid operating at now, because if you see our, okay, another one, we look at our FBM KLCI, which is our index, FBM KLCI. Okay, this one. But then remember, for index, we are not using SMA 20 or 40. We are using 50 and 200. Okay, so I change the indicator to 50. Index, we are using 50 and 200. Okay, 50 and 200. But just an extra thing for everyone to note. Okay, okay. If we see here, there's actually a death cross here happening in last month in June. So meaning to say our index is in a bear market. In a bear market, meaning to say there are not much stock that we can trade as of now. There are not much stocks that we can trade unless you're a daily trader, okay, in which you can have your time to monitor. If not, for us who are just part-time investors, so this bear market tells us that, okay, these few days or these few months, they are hard. It's hard for us to find a profitable trade. So might as well stay away from the market or spend your time reading some fundamental or the annual reports. Okay, so this one, okay, this is for the index. Remember, index 50 and also 200. Okay, we come back to our chart. For example, I click on Lee hand. Remember, for chart, we're using 20 and also 40. So I better change back my setting, 20 to 40. Okay, change. So for Lee hand, you see, okay, there is a death cross and the chart is going down. So it's a downtrend. So better avoid, don't trade, don't operate, wait for opportunity. Okay, so this is how I summon the SMA 20 and 40 and also change the background to white color. Okay, so I just put it aside first. Okay, so just now I also shared about the portfolio, the equities portfolio, and then the realized gain or loss. Okay, so this I just put it at the tab. You see, I have code screen tab. I have watch list. This is the furniture watch list which I created. I have Hevia, Home Reads, Lihan, and also Pohwat. Okay, I'm not saying that furniture is a counter we can aim. This is just my watch list for furniture counters. Okay, how do I add in the furniture counters? For example, I remove a few. Let me just remove from watch list. Okay, I remove Hevia and also Home Reads. Okay, for example, now, okay, when I want to add in into my watch list, I need to go to the quote screen. For example, just now I want Hevia. Hevia is a part of the furniture. I click in furniture, Hevia. So I click at the symbol, right click, then I saw add to watch list. So now I only have a furniture watch list. So I just click add to watch list, add to my furniture watch list. I click, then I click add. Stock has successfully added to the watch list. So I go to my watch list. So Hevia had already been added in. Okay, we cannot click here is because you look at this tab, a blue color, meaning that this is the tab. If I click here, is basically what are the counters that I have inside my watch list. For example, just I want to there's another one, a home reads. No result found because it is looking for home reads in my watch list, in which I haven't included home reads in my watch list. So I go to the quote screen. I click the symbol home reads. Then I right click, add to watch list, and add to my furniture watch list. Add. Okay. And let's say if I want to add in the home reads. Go to home reads. I go to add to watch list. This is the warrant. I add to my furniture watch list. Okay. So I go click at the watch list to see what I have added in. Hevia, home reads, Lihan, Pohwat. So these are the watch lists I already added in. Okay. So next I'm going to show how do I buy or sell. Okay. So for example, for my Lihan, okay, since I already bought it, my order status. Oh, sorry, my my order history. Okay, order history. I can click on the date when I buy. Okay, let's say I click on the date until today. I click search. So if you see, I have already bought Lihen on the 8th of July. Okay, 8th of July, and I buy at 0.86. Sorry, I buy at 0.86. Sorry, I buy 0.85. Now let's say if I want to sell it. So you see the status here is field. Field meaning to say I have ordered and my transaction is successful, then they'll put field. Okay, FILLED, field. So let's say now if I want to sell my Lihen, I want to cut loss 0.81. Okay, I click here. So you see my order path. It's a sell limit 7089, the stock code and Lihen. Now is 0.805. If I want to sell straight away, I will sell to this at the buy queue. People are queuing in to buy Lihen at 0.805. If I want to sell straight away, successful trade, it will be done immediately if I sell to those people who are waiting at 0.805. If let's say I want to wait, there is already 4 people. Here is four people with the quantity of 49,000 shares. If I want to wait, okay, if I key in, I will be the 5th person, and then 49.8 is going to plus all the 5,000 shares. Okay, for example, now I try. Okay, we test. Okay, this is my account number. My stock is Lihen. Action is sell. Limit. Okay. Okay. The quantity I have is 5,000 shares, which is 50 lot. If we look at the unit here, is times 100, meaning to say is in lot. 50 lot equivalent to 5,000 shares. Okay, I'm going to sell at 0.810. Validity day. For this ETS purpose, there is only day. In your platform, you might have GTD, good till date. But now we talk about day first. So I just skip confirmation. Okay, then I click sell. Okay, I want to sell at 0.810, 50 lot. So when I click sell, you can see there's a change in this column. Okay, I click sell. Ticket number, your order, okay, submitted on. Okay, for the status order, please go to order book. Okay, so I go to my order book, my order status. So now you see it. Okay, 11:27. I click sell. It's a limit, so it had been queued. It had been queued. Queued meaning to say what I ordered, it had been queued. So I want to sell all my lots, 50 lots at 0.81. But now it haven't reflect. Okay, last update 11/27/27/42. So as of now, you can see there are no changes in this column yet. By right, it need to be, because I already add in the 5,000 shares, right? So 49 plus 5 supposed to be 54. But because this is a simulator is based on the real chart. Okay, so far it's just for a virtual for us to try to trade. So far it haven't been reflected. Okay, so it is a queued. Okay, so it had been confirmed my queue is successful. You will change to I think you change what are the status that we have. We have active, open, field, or inactive. So I think it will be I think here it will be a buy, sell, revise. I think it will appear as a field. Yes, now I queue, but it need to be based on the actual platform. Okay, another example. Now, okay, for this one, I already click sell. So let me assume I'm going to buy my Pohwat. Okay, Pohwat. I click on the Pohwat. Okay, let's say now I want to buy straight away at 1.3. Okay, let's say I buy 50 lot, which is 50 shares. Okay, so I buy at 1.3. Skip confirmation. Okay, check again. My value is 6.5k. I click buy. So processing. This is my ticket number, my limit, validity for the day submitted. For the status submitted order, please go to the order book. Click on the order book. I click the order status. So you can see I buy Pohwat at 11:30. Okay, the status is queued. A match quantity 5,000. So meaning to say my quantity had not been matched. Again, because it's based on the actual data. Okay, so it's 5,000. Not yet. I buy at 1.3. Is it? Are supposed to match straight away, but they now haven't. It's queued. A match quantity of 5,000. Okay, so once it's, maybe we wait for a few minutes, maybe along the way, later we check, then we can see whether it's matched or not. Okay. Yep. So this is how we can leverage on ETS, how we can use it for our trade day by day. I mean, this is just a practice for us. Okay. So just now we talked about the chart. Okay. Just now I'm just sharing. The chart is just for an example. Okay. Oh, I think I forget to talk about how we can save our template. Yeah, wait, let me just call it out. Summon again. Okay, just now, yeah, I forget to save the template. Okay, again, right click, we add indicators, we add the moving average. Just to refresh again, while I'm doing this moving average, we have two lines, we click in 2 times. Then we go to the settings. We click 20. Okay, we saw the line. Then another one, we click the format. 40 SMA, we go to the style, we want it in red color. Sorry, red color. We click OK. Then I want the background to be in white because I cannot see. So I go to properties, background, change the background to white. Vertical line, I do not want it. Horizontal, I do not want it. So this is, I have it already. So I need to save it. So I save the layout. Okay. So let's say moving average MA, save. So this is the layout that I have already. So every time you can just use this layout. So just now I just bought the Pohwat. So I want to look at the chart. Okay, Pohwat. Actually, Pohwat is a bad buy because just now I mentioned that we want to focus an uptrend chart. So there's already a death cross I have here. There's a death cross. And then the charts are 5 days. The candles are 5 days. The candles are below the 2 lines. So I should not buy it. I should not be buying it in the first place. So I want to cancel my order. So if my order have not been matched, I go to order status. Okay, you see my Lihen is already partially filled. Okay, just now I buy 5,000 shares and then it's already matched 2.4. Okay, it's already been matched 2.4k, 2,400 shares. But talk about Pohwat. Pohwat, I say is a bad buy because there's a death cross and I do not want to buy anymore. So I right click on it. I write cancel. When I click cancel by right, it will update. But then because maybe something we need to take note to give to our developer. Ah, yes, it's already not yet cancel. It's been queued. My cancel had been killed. Had been queued, not killed, queued. If you see this last update, yeah, I already queued my order, but it haven't been filled. Okay, so I canceled. Okay, so yep. So again, we look at our analysis chart here. So okay, how come? Okay, let's close it. Go to analysis chart. Make it bigger. Okay, this is the one that we saved just now. I just can click in. Okay, so this is the one that we have. So I shared on how do we summon the moving average in the analysis chart, how do we buy and how do we sell. I think that's all for my sharing for today. I think for ETS, there's a lot of things we can explore. Like for example, how to set your watch list, how do we have how do we look at our portfolio, whether we are making money or not. And I think definitely in the next few sharing that I'll be share, I'm going to share about all the other functions that we have in the ETS. So I think now it's 11:35. Shane, over to you for the Q&A session.
All right. Thank you so much, Johnny. Yes, if you have any questions for our speaker today, you may write them at the Q&A box so we can address them accordingly.
Yep.
Yeah, don't write in chat box, write in Q&A box. So if you have written your question in chat box, please put them in Q&As so we can easily manage your questions. Jason asks, how do you determine entry price after the golden cross?
Okay, like I mentioned just now in my chart, okay, particularly if there is a golden cross, for me, I will monitor for 5 days. I will enter at day 5. I'll buy at day 5. Or if you see there's a support there, you can buy at the support also. So for this purpose, I will say we buy at day 5. We monitor for 5 days. Okay, we buy at day 5.
Okay.
Yep.
So like what you mentioned, buy at day 5.
Mm.
So if we do day trading index futures, which pair of SMA or EMA is suitable?
Okay, I think if you're trading for futures index, day trading, I look at your word day trading. If you mention about day trading, I don't think so. Moving average is a good indicator because moving average is you taking the past that data and then you try to forecast. I think for day trading, you need to focus more at the candlestick patterns, whether it's a bullish engulfing curve or a hammer or things like that. I think it will be more relevant. But if we want a sensitive chart, okay, we can use EMA. So I
EMA
think
lah.
EMA, yep. So
Okay.
I think to answer Jason's question, I think SMA or EMA, if compare these two, EMA might be more sensitive. But then for day trading purpose, I think candlestick pattern is more useful.
How about shorter and longer EMA?
You mean for okay,
The next question is, to trade futures, will you use shorter or longer moving average?
shorter? Because I know that for futures there's a contract, right? I mean there's a duration for it. For me, I'm going to use shorter.
Okay. Now, before we apply the indicators, firstly, we need to learn how do we filter the counters, right?
Correct.
So Naresh issue is, how do we identify the stocks to trade? So his question is, how do you screen the counters? Do you have any screening method?
Okay, good question. Thanks for your question. So normally, if you notice the examples that I give just now, all are the stocks which are above 1 ringgit, meaning to say those companies are making profit for at least 1 quarter or 2 quarters. They are not loss-making companies. Okay, so my first screening, normally what I use is I'll use the stock screener, the KLSE screener that I have. So I'll set an indicator saying that indication that these companies are making profit in the near term. They are not loss making. Okay. After I filtered those companies, then I'm going to look at the chart one by one because I'm learning at the same time also. I do not want to just screen out the chart and I'll look at those charts. So from my screening criteria, the screening result I have in my KLSE screener, so I'll look at the chart one by one. So that's how I do my screening.
Okay. Now, Viking like to ask, if we execute the buy and sell on day 5, but then the candles are in between the two SMAs, what should we do?
Okay, thanks Vic. Thanks Viking for your question. So it's a decision for us to make. Okay, sometimes when the candles are between those two lines, for me, I will be safe margin. I will assume, okay, for example, now I want to sell. Okay, I want to make sure that my margin, I mean, I maximize my profit or I minimize all my losses. So let's try to compare with, let's try to see if there's any nearby support or resistance. Yeah, I think that would be my suggestion.
All right. So the next question is by Placis. During downtrend, your advice is for us to step out, right? Is it possible for us to short?
I think in Malaysia market, we still, well, I mean, our short is not so mature yet. We have an RSS here, the short selling. So if you can apply the same strategy whereby we buy, I mean, we short the market. We can do that.
We
But
also
I
have
think
IDSS, intraday short
IDSS,
selling.
correct.
So
But so,
IDSS is easier lah. Huh? Okay, I think most retail investors who short the market are using IDSS, but you have to cover back your position by the end of the day. So
correct.
that's why I call intraday. Yes, so you can short in the downtrend. Of course, if you don't want to short, you can also consider inverse ETF. We also have it available on our Bursa Malaysia. All right. In other words, if the market tank, your inverse ETF will appreciate in value. Of course, when the market rally, then of course your inverse ETF will depreciate in value lah. All right. So these are alternative tools for you to short the market if you don't want to use IDSS, but you want to use inverse ETF. Of course, you can also short the market through futures lah. Huh? Of course, we save it for another day. So the next question is, how do we sell odd lots?
Okay, I think in some platform, especially I think for Kenanga, which are using eForce platform, I think we can sell odd lots. If not, the best way is if you have a remiser, you can contact a remiser or your dealer on how to sell the odd lots.
Yeah. Actually, for example, what you said just now, Kenanga, right? For example, the one that you're using powered by Excel Force.
eForce,
you can go to the odd bot market. So you can't sell odd lot in a bot lot market. You have to click the drop down menu to go to the odd lot market. So that's where you can buy or sell odd lots. So it's not in the normal bot lot market. Okay. The next question is, during uptrend, will we get more profit by holding, or we trade a few times when there's a new low and sell when there's a new high?
Thanks, Placis, for your question. So there is no direct answer to this. So for my explanation, for my answer, most probably it will be based on your daily activity. For me, because investing is my is not my core job. Okay, so what I will do is I will just buy, and if there's no selling signal, okay, there's no selling signal, I will not sell. Unless there's a selling signal for me, then I will sell, because I do not have full 24 hours. I mean, it's just my investing is just my part-time job. I do not have time to monitor unless I have time to monitor. So I can place my order, or I can monitor. I can make decisions faster. But since it's not my core job, so I will just sell at the sell when there's a selling signal. So it all comes back to you. Whether do you have a full-time job or you are fully trader. So if you're a full trader, yeah, you can go for it.
Okay. Mohammad Tali would like to ask, how do we set stop loss here?
I think currently in our platform, I don't think so here currently we have a stop loss yet. Okay.
Yeah, because the order is we can only do limit order on
Correct.
this virtual trading platform. But on your real trading platform, then of course there are a variety of orders that is provided by your broker. So you can check your broker.
Yep.
So this virtual trading platform offered by Bursa Academy will provide you with 100,000 virtual trading amount. That's where you can exercise. I think I also see that Peter asked a question: do we need a broker to link to the live trade? If I could take on Bursa Academy, we can't link to a broker. So this is just for you to practice. So if you want live trade, of course you open use your real trading account. All right. So in Bursa Academy, you can't link to any broker to perform live trading. So any trades that perform under equity trading simulator in Bursa Academy is virtual. The next question is by Eng Huat. For index, right? Should we use moving average 50 and moving average 200?
Okay, thanks Eng Huat for your question. Why for index we are using moving average 50 and 200? I forget my answer already. Okay, because for index, index is a longer term. So if we look at moving average 50, meaning to say is like 2.5 months. We are using 2.5 months and also around like 1 year of information, 1 year of data, the past 2.5 months and also 1 year data to forecast on the future, which is which is above 6 months. So we're using a bigger 50 and 200 for that.
Okay. Let us take the next question. David would like to ask, do you have any strategies for us to catch bottom?
Okay, I think in one of the, I think Shen, in one of my webinar sharing with Live Champ, I think last year there is a topic from me on how do we, I think it's
Catch bottom,
conducted
right?
in Mandarin. Yeah, is how do we catch the, catch a rebound. It's definitely a few strategy. For example, I just mentioned a few on the chart patterns. There are reversal like a hammer. Okay, of course this one we can align together with the Fibonacci retracement. So in my webinars before, I say that we focus our bullets. First bullet at 50% Fibonacci retrace, another bullet at 62%. So we try to monitor if there is a hammer pattern or bullish engulfing during the downtrend. So that will be my advice. But then for better clarification, I think you can refer back to Live Champs the replay, the recording.
All right. The next question is by Mohammad Sufyan. Would it be suitable to use moving average 5 and moving average 10?
And it is suitable. It depends on your intention. For me, I focus at the midterm, which is, so that's why I use 20 and also 40 for midterm. If you want to use 5 and 7, you can test it out and see whether it suits you or not. You can just take for a few examples like what I do just now. You take a few simulations, a few charts, then you try to determine what is the best way. Is 5 and 9 is working best for you. I assume that a semi full-time trader, so you can try and apply and see whether it applies for your strategy or not.
All right. So the next question is by Jason. Both the stocks that you covered just now, Lihen and TSH, are losing trades. So may I know on what indicators do you use for entry?
Basically, those Lihen and TSH are just for educational purpose, because I know that today I want to share how do we sell the stocks. Okay, so that's why I bought it. I purchased it last week. So just to share and demo how do we sell using the ETS platform. So there's nothing intention, no reason why. Why TSH and Lihen is because I'm more familiar with these stocks. So that's why I use example for this. Yep, Jason. Hope it doesn't misguide you or anyone. But like I said just now, for Pohwat, it is not a good buy. So that's why we cancel the buy, the buy late just now. So it's you see here, just now for Pohwat already cancelled. So now for the status is already cancelled. Yep, because just now we realized that we go to the chart, we say there's already a death cross and it's in downtrend. We should not be focusing at that. So I click cancel. So it's already canceled now. Yep, just another example on how we can leverage on ETS.
All right. So on Bursa Academy, can we also view sectors analysis chart?
Sector analysis chart. Yep, can. Let's go to the analysis chart. Okay, for example, now let's look at let's look at technology. Okay, we go to the layout that we have saved just now. Okay, I look at technology. I click on the technology. So there's a lot of technology. So, okay, because this we're taking from the trading view. So so we need to look at one by one. So all these are stocks here. We look at index. Okay, if you click the index, we see there's a Bursa Malaysia technology. So we click on that. So again, for our index, we'll still use back to 50 and also 200. So I will just change it first. 50 and also 200. So I might as well just save it as, or save as, oh, okay, just now I save on that previously. Okay, now let me just rename it as a MA for index. Yeah, we can use it to look at the sector chart also. We just need to make sure that we click everything correctly. For example, plantation, we look at index here, there's a Bursa Malaysia plantation, we can just click in. Yep.
Okay. Can we create a watch list based on indicators such as golden cross with high volume?
So far I think it's not feasible using the ETS. For me personally, unless you have some software in which I'm not aware of, but normally what I do is I will screen based on the fundamental first, and then next I'll look based on the fundamental stock. Yep. For the time being, I do not have any indicator, but I think I remember for CIMB platform there is such function. Please correct me if I'm wrong. I'm not sure. Maybe we can gather some more information. As of now, for this ETS, I don't think so. We have.
All right. The next question is there any function to print alert on Bursa Academy?
As far as I know, I think there is not. There's no print alert.
Okay. So is the price feed real time or is lagging?
The price is real time. The price is definitely real time. But then just the trade that we have, like for example, the order status that I have just now, it will be based on the real time. It's not like I queue here. It's not okay. For example, just now for Hevia, if let's say in my own in my trading platform, not this ETS, in my real platform, if I buy now 0.44, it will straight away match. But then in this ETS, if I queue 0.44, it will not match. It will just say queued, like we said, like we have just now. It's just queued. And then we need to wait for the actual world, the actual platform. If there are some similar trade, then it will only be filled. If you understand what I mean, it is all mirrored against the actual platform. I mean the actual world's platform.
Yeah, so if you add order, of course, your virtual order won't add to the real
Correct.
trading platform lah. But if you want to match, you got to match the existing buy and the queue orders. All right.
Yep. Correct.
Yeah. So this virtual trading platform is, in my opinion, is already very, very powerful. That can give you real time price feed, and you can practice your strategy. If everyone start with 100,000, if you have run out of the money, then you can email to Bursa and ask them to reset the account for you lah. Of course, if you want to be faster, then you sign up a new account. Then you don't have to wait for the reply, right? To sign up a new account, username, then you have fresh 100,000, okay, to use in the equity trading simulator under the Bursa Academy. Okay, I believe Johnny has shown us, has shown us many key functions of the equity trading simulator. So before we wrap up the session, Johnny, do you have any concluding remarks you want to share with us?
Can normally for technical analysis, it takes practice. Just like Bruce Lee, you go to learn a kung fu, you cannot master in one day. So it takes time and also patience to learn. Of course, just now when I mentioned, we need to do our learning, try to be better in each trade. So we need to learn new skills and try to apply on ourselves. So it's all about try and error. Yep. So that's my conclusion.
Okay, so keep practicing, keep trying, keep honing the craft so you can become a good trader. Okay, so success doesn't take one day, Of course, it takes years of accumulation of experience and face certain adversity and setbacks before you can emerge as a successful trader. Okay, and trading can be a lucrative career as well, right? So if you can master this trading skill, then of course you can consider full-time trading as as your
Career.
livelihood, yeah, as a career or as a livelihood. All right. So thank you so much, Johnny, for sharing with us. Stop picking with technical analysis. So of course, if you have more questions for Johnny, you can write in the Q&A box. Yeah. So in the meantime, okay, let me. Oh yes, this is the thank you slide. So thank you, everyone. So before we conclude, okay, I think Johnny has talked at length about the equities trading simulator. So what exactly is Bursa Academy? So Bursa Academy is a comprehensive one-stop e-learning platform that aims to provide investors with a continuous and holistic learning journey. So this is a one-stop e-learning platform. It is very simplified. It is very user-friendly and it's accessible anywhere, anytime at your own pace. So if you want to visit, you can go to www.bursaacademy.bursamarketplace.com or you scan the QR code that is at the bottom right corner here. So that will take you to the website. All right. So on Bursa Academy, not only will they have, equity trading simulator, I believe they also have a derivative trading simulator as well, somewhere at the banner. Of course, there are also many investing resources for you to learn. Okay, they are investing articles, they are investing videos, they are investing recordings, they are investing quizzes, coursework for you to do, so you can take your skills one step higher to learn about the market strategies, to learn about product knowledge, be it in securities, in derivative, in exchange traded funds, or structured products like structured warrant, or leverage and inverse ETF, exchange traded bonds, and so forth. Okay, so you learn, the platform provide you resources in equities market, derivative market, and also the Islamic capital market. Okay, so you can also visit the Bursa Sustain, where you learn about what are the sustainable practices that are employed by all the listed companies, and for you to understand a bit more about ESG. So that's where you can visit Bursa Academy to gain all the knowledge that you need. Of course, if you want to get, I believe that if you want to get the the certificate to to qualify you to trade leverage and inverse ETF, you can also sit for the coursework there in Bursa Academy. So if you have finished the modules that they put there, that present, I think you present to your brokers, then you'll be able to qualify yourself to trade the leverage and inverse ETF, because I think this is only for a certain category of investor who have fulfilled the criteria set by Securities Commission. All right. So let me tell you about our next webinar. All right. So our next webinar is titled How to Avoid Value Traps in Dividend Investing. So when it comes to investing in the stock market, there are bound to be traps, okay, to trap all these fundamental investors. Okay. So the next webinar, which is happening tomorrow evening from 8:30 to 10 o'clock. So we will discuss about what are the value traps when you want to do dividend investing. So what are these traps and how do we avoid them? How do we spot for all these signs of these value traps? Okay, so I've just given you the registration link in the chat box. You may go ahead and register. Okay, tomorrow we should have the registration is quite huge, so we will have we believe we have a large crowd tomorrow night. All right, so if you don't want to miss out, please click the link that I just given you in the chat box to learn more from our speaker tomorrow, who is Mr. Ian Tai. All right, so with that, I want to express our utmost gratitude to Mr. Johnny Tiong, who take his precious time to join us in this Bursa webinar to share with us, stock picking with technical analysis. Hope all of you here have gained enormous value from this webinar. So we'll see you in our next session. Bye, everyone.
Bye. Thank you.
Thanks, Johnny.
Have a good lunch.
Oh, yes.